Hey everyone, this is June from Turning Point Life Investment, and this is your stock market analysis for February 25th, 2012. Okay, so the market just continues to chug along here, moving ever so inching its way higher. And you can see it's still in this overbought territory, but the main thing that I've always stressed ever since this market was going up was that as long as it stays above this 20-day moving average, you never want to over or underestimate the strength of a trend. So until this 20-day moving average actually breaks or closes underneath it, then I would have a feeling of change in trend for this market. But for now, as long as it stays above it, you still have to respect that the trend remains up. Although we are coming very close, I think the market more or less hit the prior high of the previous high of May 1st of last year. So we are coming up upon a very important critical resistance level right there. So it should be interesting to see if buyers have enough strength to push it above that level. I mean, especially given that it's already overbought and already stretched out. But like I said before, just like how we had a nice 2.5 month rally here, nice 3 month rally here. So not until it breaks that 20-day moving average, then maybe we can switch our tunes. But for now, you still, like I said, you still want to respect this uptrend. Okay, so let's take a look at this, the VIX here, the sentiment indicators. The VIX remains in divergent mode, seeing how the market has continued its way higher. The VIX has yet to show that same breakdown. Okay, so that's something to be cautious about because the VIX isn't making a new low, and it seems to be holding, maybe even forming a potential double bottom right here for the VIX. So again, just a cautionary note if you're still holding long positions right there. So don't be surprised if the market does experience some kind of a pullback. And another interesting tidbit is if we were to use this inverse head and shoulders right there, okay, you can see the left shoulder of the head and then the right shoulder right there. Usually what people like to do is take the measured move or the height of this head and shoulders and just kind of add it and project a certain target. So if we say this is about a 100-point target and a breakout from here would be 100 points up, we basically more or less have fulfilled that inverse head and shoulders target. Okay, so that's just something that's interesting that I want to point out to you guys. Now, when it comes to our own trading on our website, we've been pretty diligent as far as taking profit because given that the market is starting to show signs of its some divergence and it's losing momentum. For example, with PII, we managed to just take some good profit when we got in at 66. Saw that it was having trouble surpassing 70, so we said let's take some profit there. Same thing with AKRX, got in around 1150, 1170, took some profit up here. So in this market conditions, if this rally that we're having was brand new, then I'll definitely allow a stock to run a little bit longer. But given that the market looks like it's not exactly at the beginning anymore, it looks like it's somewhere towards the end of this rally, I would be more inclined in taking profits a little bit earlier, because the last thing you want to do is see that profit be given up. Okay, so this is exactly what we do, and this is what we recommend to our traders on our website. So if you're interested in having a 30-day free trial to our website, go ahead and shoot me an email. I'll be more than happy to give that for you.